Is it still possible to pay low or even zero taxes in 2026? Stay until the end of this video and you'll discover the top 5 tax residencies in 2026 from an international tax advisor with over 10 years experience advising high net worth individuals and large multinationals. This is TaxMove, where ambitious people go global. Hello everyone and welcome to a new video. You've been asking a lot about this video and it's finally here. Alejandro's top 5 tax residencies for business owners in 2026. Spoiler, number 4 is a hidden gem and it has been overlooked by everyone. It's our favorite choice in Europe and your effective tax rate can be even lower than a 10%. So grab some popcorn and enjoy. Number 5 is Cyprus. This magical island combines a Mediterranean lifestyle with amazing beaches and low taxation. Also, it's one of the most flexible tax residencies in the world. Apart from Paraguay, since you can become a tax resident by just spending 2 months in the country if extra conditions are met, such as having a permanent home and carrying out an economic activity there. So the common structure for digital businesses or business owners is creating an LTD in Cyprus and distributing dividends. However, due to a recent tax reform, Cyprus has lost a bit of its appeal from a tax standpoint, since the corporate income tax rate has been increased to 15%. This corporate income tax rate is aligned with other European countries. So you will be paying 15% corporate income tax on the profits generated by the company, and then personal dividend distributions will be only subject to a health insurance contribution under the non-dom scheme. The health insurance contribution is 2.65% and it's capped at an annual income of 180,000 euros. Also, you need to keep in mind that if you have transactions with final customers in the European Union, meaning B2C transactions, you'll need to charge a 19% VAT on top of the net amount. This makes Cyprus less competitive compared to other jurisdictions such as the UAE, Panama, or Paraguay. Let's say that you want to invoice 100 euros to an individual in Italy. You will need to add 19 euros on top of those 100. It's true that these 19 euros are paid by the customer, but it's clearly more difficult to sell a service that costs 119 euros than a service that costs only 100 euros, which would be the price when selling from jurisdictions outside the European Union. So as you can see, Cyprus might not be the best choice for business owners. However, for high net worth individuals receiving passive income can be an excellent option in Europe, since, as mentioned, under the non-dom regime, they will only pay the 2.65% health insurance contributions on the total amount. By the way, for those who don't know me, my name is Alejandro and I'm an international tax advisor with over 10 years experience in international taxation and wealth preservation. I've lived in major financial hubs such as Amsterdam, Luxembourg, and currently Dubai. I also worked as a lawyer at Big Four firms and I was ranked among the best tax advisors for 2026 by Lexology. So as you can see, I'm not just another random YouTuber or internet guru talking about taxes on the internet. Number 4 is Serbia. This is our favorite choice for those who want to live in Europe, value privacy, legal stability and safety, and want to stay away from woke policies, which are becoming the norm in the European Union. Also, the cost of living is significantly lower compared to other jurisdictions in the European Union, so you can enjoy a Western lifestyle while paying Eastern prices. Serbia is not as flexible as Cyprus, since to qualify as a tax resident you need to spend more than 180 days in the country. However, under the sole proprietorship regime, your effective tax rate can be even lower than a 10%. The corporate income tax rate in Serbia is 15%. However, for those who want to operate without forming a company and want to apply for the sole proprietorship regime, they can pay only a 10% tax on the net income. There is no additional taxation, so the total effective tax rate can be even lower than a 10%. This is why Serbia is our perfect choice in Europe, since there is no country offering a lower effective tax rate. Also, keep in mind that Serbia is not a member of the European Union, so you will not be subject to European VAT rules. If you invoice final customers in the European Union, meaning B2C transactions, no VAT will be added on top of the net amount. Going back to the Cyprus example, if you invoice 100 euros to an individual in Italy from Serbia, the final amount will still be 100 euros. From Cyprus, that same invoice would amount to 119 euros. This is why Serbia is more competitive than Cyprus, from both a direct tax and an indirect tax perspective. Finally, another major pro is that Serbia is not subject to European Union directives, which usually mean more bureaucracy and more controls. This is why we see Serbia as a perfect oasis in Europe. Its location is unbeatable, it's close to the Mediterranean, and very well connected to major European capitals, while at the same time remaining outside of the European Union. If you're considering moving your tax residency to Serbia, get in touch with us and one member of the team will help you secure it. Number 3 is Paraguay. Paraguay is currently the best option for digital nomads who don't want to live permanently in one country. It's the most flexible option since you can qualify as a tax resident simply by activating your RUC, which is your tax ID number as a freelancer. Paraguay operates under a territorial tax system, meaning that all the income generated outside Paraguay will not be taxed there. However, if you provide any kind of service from Paraguay, keep in mind that you'll be required to invoice using your RUC number, and a 10% personal income tax plus a 10% VAT will be applicable. So if you plan to settle in Paraguay long term, it might not be the best option, since you can pay even less tax or achieve a lower effective tax rate in Serbia. The most common instructor for digital businesses is operating through a foreign company and distributing dividends. Under Paraguay's territorial tax system, these dividends will not be taxed in Paraguay as long as they come from outside Paraguay. One thing to keep in mind is that Paraguay has a very limited double tax treaty network. So if you need to rely on a double tax treaty to break ties with your home country or to reduce withholding tax rates, Paraguay might not be the best option. If you're enjoying this video, please hit the like button and subscribe. It really helps me create more content like this. Number 2 is Panama. Panama is one of the most reliable options out there. There have been no major changes in its tax policy for many years. So for those who value privacy, legal stability, and clarity, Panama can be a perfect choice. This country combines a vibrant lifestyle with a tropical weather and both Pacific and Caribbean beaches. It's not as flexible as Paraguay, since you need to spend at least 183 days in the country to qualify as a tax resident. However, Panama has a more extensive treaty network, clearer rules, and a broader territorial tax system, since all the income generated outside Panama will not be taxed there. This is different from Paraguay, where if you provide any kind of service from within the country, you need to invoice using your RUC number. Like Paraguay, the most common structure is operating through a foreign corporation. This way, you can fully benefit from Panama's territorial tax system, and no taxation will be triggered. We also recommend combining your tax residency in Panama with a private interest foundation for asset protection and wealth preservation, since these vehicles also can benefit from the territorial tax system in Panama. The easiest way to obtain a residence permit in Panama is by incorporating a company with local operations or by purchasing a property worth at least $200,000. Number 1 is obviously Dubai, in the UAE. The UAE is currently our tax residency and where our headquarters are located. What we love about Dubai is the level of safety, sunshine all year round, strong networking opportunities, and its tax system. Regarding taxation, there is no personal income tax, which makes this country very attractive for business owners and investors. There is also a corporate income tax of 9%, which applies only to profits exceeding 375,000 dirhams. If your revenue is below 3 million dirhams, you don't have to pay any corporate income tax under the small business relief. So yes, it's still possible to pay zero taxes in Dubai. Keep in mind that if a personal income tax is implemented at some point, Panama would obviously jump to the first position. But for now, the UAE remains our top destination for business owners. One downside is that some double tax treaties only apply to UAE nationals. So if you need to rely on the tiebreaker rules or reduce withholding tax rates under a double tax treaty, keep in mind that your case should be analyzed in detail. If you feel ready to move forward and want to explore any of the jurisdictions mentioned for your tax residency, please book your free initial consultation and one member of the team will guide you through the entire process. Also, drop a comment below if you think we've missed any jurisdiction or country in this top 5 ranking.